Hello everyone, thank you for joining us today and welcome to this educational presentation of You Deserve to Become a More Consistent Trader, and I can show you how. Now, the reason I can show you how is because I've been trading for roughly over four decades actually, and in that 4 decades of my trading experience, I know what works in terms of consistency and I know what doesn't work. Now, unfortunately, the majority of traders trade conventional wisdom, things that we've been taught from the start that are supposed to work, but actually don't. Let me give you an example of what I mean here by looking at this chart here. Here's a chart in UI going back to November. Now, this is the way most people would analyze this, looking at this, and come up with what they have studied and what they have, felt they've researched enough, and this is what they've gone and seen and heard in a chat room or a trading room or on TV, and this is what they feel justifies their trading decisions. For example, someone looking at this chart would say, well, Steve, in the beginning we were going up, and in fact it was the clear definition of an uptrend. We had higher highs and higher lows, which in fact we do. So that's an uptrend. But then at this point, that $5,000 class I took pointed out that we ran into some trouble, some resistance here, because this is where the institutions, this is where the banks are selling, this is where the big money is. So obviously we're having a hard time getting through this resistance, okay? Now, as well, we start to go lower and we all of a sudden define a downtrend. We're making lower highs and lower lows. And all of this is true. But you see, when you start combining these things along with faulty usage of candlestick, for example, right here, there's a bearish engulfing pattern as well as another one right here. When you start combining all these things, you start coming up with a mindset and saying, well, these things are supposed to work, right? They have high levels of consistency. So obviously, we have lower highs, lower lows, excuse me, a couple of bearish engulfing patterns. And this guy in the chat room is telling me the market wants to go lower. I shouldn't buy this because of the resistance. So we're in a downtrend. I think I'm going to sell this. So you wait for the first up day, which is right here, and you decide to sell. Now you're all excited because most likely it's going to go lower. All the clues you've been giving, after all this stuff's supposed to work, right? So all the clues you've been giving, all the conventional wisdom that's supposed to work, you're excited because you're most likely going to have a nice trade here to the downside. Let's say you bought the puts. And then this happens. Okay? Look familiar, right? And you say to yourself, well, what happened? I did all the right things. I studied all the stuff that's supposed to work, all the stuff for ages that I've been taught, all those courses I took, all those chat rooms I went to and all the people I listened to. Why didn't it work? Well, remember I said I can show you how, because in my 43 years of trading, I know what works in terms of consistency and I know what doesn't. In fact, what I'm going to share with you today actually would have generated, instead of a sell signal, instead of all this noise which was telling you the market was going down, it would have told you actually the market is going up. And instead of selling, you would have actually had a buy signal on the same day you sold, which potentially could have generated 50 points in 2 days. So this is all going to be made simple and easy on our new platform, the PTS Primo Charting Platform. I designed this with Pro Trader Strategies with one goal in mind, and that was simply to teach you how to become a more consistent trader. So this is going to be a great educational presentation today. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. And as you can see, our whole goal is simply to educate you. That's what we want to do at Specialist Trading. We don't want to tell you that we have the most perfect system, that we never fail with any of our picks, because we don't even give picks. All we do is educate you, because most traders just simply take themselves out of the game and let someone else decide how to trade for them. Either someone in a trading room, some guy on TV waiting for the earnings reports to come out, and this is going to decide for you what you should be buying and what you should be selling. Well, if this works so well, then why do 80 to 85% of all traders fail? Well, it's because this really doesn't work that well. There is no consistency in that. But once you start educating yourself with the things that actually do work, then you can make your own trading decisions. You don't have to rely on the things like I just showed you, like support and resistance, such as faulty ways of using candlesticks. And then you can really start to become a consistent trader. And I can show you how to do this in our courses and in our educational presentations, as you'll see today. Now, this is going to be a great educational presentation. I'm going to share with you a couple of edges you can start using right away. But before we begin, as always, we're first required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results today and how to become a consistent trader. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. Now, I see a lot of new faces here today, so if you haven't done so already, we're inviting each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. I post different educational information on a daily basis, anywhere from signals that have been generated on our platform or in our strategy courses, as well as little bits of financial wisdom I've accumulated along the way. So there's lots of great free information. Feel free to follow us on Twitter. Now, excuse me, once again, if you've come here, we often say this in our presentations, if you come here, if you're new to my presentations, I see a lot of new faces today. If you're coming here thinking that I'm going to tell you what to buy for tomorrow or what to sell or what I think the market's doing, you've really come to the wrong place, because that goes entirely against our philosophy. We are an educator. We're simply educating you on things that have shown high levels of consistency, with the goal of you making your own trading decisions, of you deciding if the market's going up or going down. You see, you should never ask anyone, well, what do you think of this stock? What do you think of this market? What do you think is the best time frame? Those are the worst things you should ever ask, because when you ask that, what you're really saying out loud is, I don't know what to do. I don't have any idea, so why don't you tell me? That would be comparable to an airline jet pilot, en route from LA to New York, asking the passengers, how do you think I should land this? How do you think I should fly this? You would never hear that. And if someone did announce that over the plane, you'd just be terrified. It's the same way with trading, though. Every trader does that. You always ask someone, or you go to a chat room, a trading room, finding out what someone else likes or someone does. That's really basically saying, I don't know what to do. You should never be involved in any endeavor without that type of motivation, without that type of mindset that you know what you want to do. So as you can see here, we are first and foremost an educational company with our goal to teach you, not to force feed you signals, not to tell you what we think of the market, not to tell you what we think the best market is to trade or time frame, but to teach you so that you can make your own decisions, these own decisions on yourself. So this is the specialist edge, the same edge that was taught to me some 43 years ago, and the same edge which I truly believe has sustained me for that same amount of time. This is our goal, to sustain you, not so that you have a couple of good months or a couple of good years, but a couple of good decades. You can be trading 20, 30, 40 years down the road, okay? Now, since this is a class, I want you to ask me as many questions as possible, but please wait till the end of today's class. We have a lot of people here today in today's class, so I don't want to stop for every slide to answer a question. The only question I will answer is this: if we are recording our presentations, yes, we are. So if you have to leave early or if you're having technical issues, don't worry. We will send each and every one of you a link to this recording. All right. So please, if you have a question, please wait till the very end to ask them. Excuse me. Let's begin today's presentation. Now, I want to start out by telling you that there are two things that are needed in order to become a more consistent trader. All right, these are two things that you have to have, and these are two things that most traders don't have. So the first thing is you need a trading plan. Now, I know all of you are saying, well, I already have a trading plan, but you need a trading plan that's based on market behavior. You see, remember that first slide I showed you, and you were talking about, well, there's resistance right here, so that's the institutions and the big banks selling. And then there, let's see, there's candlesticks that are telling me that this is going lower or going higher. That's not market behavior. Market behavior means that you're listening to what the market is telling you. You see, the market gives you clues as to what it wants to do. Now, this is not advanced. You don't have to have some special tool or some special way in which to view it. You can start doing this today. And I'm going to give you two edges right now to show you how simple it is to listen to market behavior. Here's the first rule. Here's the first edge. If you get a buy signal or a sell signal in your strategy, I don't care what it is, these signals can only be entered above or below the 50-period moving average. So in other words, if you get a buy signal, it must be entered above the 50. If you get a sell signal, it must be entered below. Sounds simple, right? But let's look at this example right here. Do you see how all these bars are above the 50? If we are above the 50 and you get a buy signal, I don't care what the strategy is based on. It's going to be in sync with the overall trend. Why? Because the overall trend is up. You always want to be in sync with the overall trend. And conversely, if you get a sell signal where you want to buy the puts or you want to go short, doesn't matter what market, could be futures, could be commodities, could be currency pairs or stocks. It makes no difference. you want to get that sell signal below the 50, as you see here. Why? Because the overall trend is down. You see, if you trade against the overall trend, that's like swimming upstream, or that's like swimming against the current. I mean, why would you want to do that, right? I mean, you can do it, but you'd be exhausted, and it would take you a while to get to where you want to go. It'd be a lot better if you swim with the current at your back. That's what it's like when you're buying above the 50 and selling below the 50. Now, if you don't believe me and how powerful this edge is, go back and test your last 10 or 20 trades. I can almost guarantee you that the reason why you lost is because you were buying below the 50 and selling above. So go back and do the research. It's really going to open up your eyes. All right, so now that we know edge number one, how to find the overall trend, we want to listen to the market to define the short-term trend. All right, so this is when we get a signal setup bar. This is when all the requirements, all the rules of our strategy have come into play. And we know that we're either going to buy or sell. We're above or below the 50-period moving average. We're in sync. But now we want to listen to the market to tell us exactly when and if we should be getting in. And this brings us to rule number two. Buy or sell signal bars, these are the setup bars, must close in the top or bottom 25% of their range. In other words, let's say you get a buy signal. Let's say it's based on earnings, okay? You're above the 50, so you say, well, okay, I listen to that Steve Primo guy, and I get my buy signal, and it's above the 50, so I should just buy at the market, right? In order to add a higher level of consistency, you want to see that bar close in the top 25% of its range, all right? If you're going short, the bottom 25% of its range. As we can see here are two bars that close in the top 25% of their range. You see how they just went up. Now this one went up, not a lot, but it still went up. But look how well this one went up, okay? That's showing you that the short-term trend tells you that it wants to go higher. So now you're in sync with the overall trend because you're above the 50. And now you're also in sync with the short-term trend because you closed in the top 25%. It works the same way to the downside. Let's say you get a sell signal here based on the earnings. All right, if you had gotten the sell signal, let's say somewhere here, don't take it because it closed in the top portion of its range. And you see it went a little higher. Probably at this point, you would have covered saying, this is not going to work, I'm losing money, and then it would have started going down. It would have been much better to wait for this bar that closed in the bottom 25% because then you're in sync with the short-term trend, okay? Now, these are two very extremely powerful but extremely simple tools. You can start applying them to your own method right now. In fact, these are so powerful that they incorporate almost half of the rules to one of our most consistent strategies. That's strategy number 4. You've heard me speak about it before. This was the first strategy my mentors taught me some 4 decades ago, and I continue to use it on a daily basis. That's how great of a strategy it is in terms of consistency. Let me give you some of the highlights here. It was originally designed for traders looking to catch momentum. But when we say momentum, we were getting in and out of trades in roughly 5 minutes because we were trading on the floor of the stock exchange. That's where I first started trading. But now we've devised ways to stay in the trade weeks, months, even years if you'd like. It's a pattern recognition strategy. So we're looking for a basis of a pattern that repeats itself over and over and over again in any time frame and in any market. In our course, we teach you how to identify this pattern. And it only uses one indicator. That's how simple strategy 4 is. And guess what? You already know what that indicator is. It's the 50-period moving average. So you already have 2 of the rules actually to this particular strategy. You have that and the second rule, which was closing in the bottom or top 25% of its range. Let me show you how consistent this method is. Remember, we're talking about the 2 rules. Well, here's the first rule. We're above the 50, so this means we're only going to be looking to buy. The second rule is we're looking for bars that close in the top 25%. Here's one, here's another one, here's another one, and here's another one. So why is this the buy signal? Because remember, I can't give you all the rules. There's a specific pattern that we're looking for. And that's what makes up the next 2 or 3 rules of this. Now, I can't give that away, but I gave you the first 2 rules, okay? Now, these bars did not meet the qualifications of that pattern, but this one did. So, look what happened. The stock goes up 20 points coming into the first week of January. This was just a couple of weeks ago. See how consistent this strategy is? It works the same way to the downside. Here's an example in PINS. This was in October coming into December. We're below the 50. Now we're looking for bars. The second rule that closed in the bottom 25%. Well, this one did, and this one did. So why is this a sell? Because remember, there are other rules that need to be met. Unfortunately, it wouldn't be fair to me to share them with you, to give them away for free. for all the people that own Strategy 4. We have people trading Strategy number 4 in over 115 countries and in every state in the United States. So it wouldn't be fair to them if I all of a sudden gave it away for free in a webinar. But I've given you 2 of the 5 rules I believe in this strategy. And this was the only bar that met all the requirements. So it's a valid sell signal, and look what happened. The stock fell 10 points coming into last month. The beauty of Strategy 4 is if this trend is strong enough, don't worry, you wouldn't miss a signal because oftentimes there are more signals being generated along the way. Each and every one of these bars is below the 50, these sell setup bars, and they all closed in the bottom 25%. So as you can see, strategy number 4 is our most consistent trading plan. Why? Because it's based off of market behavior. We don't care what the earnings are. We do not care what the volume is. We do not care what the institutions are doing. We do not care about candlestick patterns. We do not care what some guy is saying on TV. We're only listening to one thing. That's the source. That's the chart in front of us. That's what we mean by consistency, because you're in sync with the very thing you're trading. Now, just because it has a high level of consistency, I don't want you to think that every trade is a winner. That's not what consistency means. Consistency means that you're aware that you will have some losses from time to time. For example, let's look at this chart here in SIX. This was just last month. All right, we're below the 50. We closed in the bottom 25%. So this is a valid sell signal, right? So you sell, and then this happens. You say to yourself, wow, okay, well, this isn't working out too well. I've got the puts, and it's not working out too well, but you know what? We're still below the 50. This bar closed in the bottom 25%. It meets all the requirements of a strategy number 4 sell signal, and it is. So you know what? I'll double up. I'll sell some more. And then look what happens. At this point, you say to yourself, wow, you know what? This thing is poised to go up, and now we're no longer even below the 50. We're above, so I shouldn't be shorting anything. So you know what? I'm going to get out. I'm going to take a loss. So you have a loss, and then the stock kind of drifts, and it drifts lower. But all the time, it continues to close above the 50. And now it's generating buy signal. So you say to yourself, you know what? We're probably going to go higher. This is probably just an up move, a consolidation, a pullback, and now we're going to go higher. So I'll buy these 2 signals and I'll make my money back. And then this happens, okay? At this point, you're probably ready to, come up and punch me in the face thinking that this stuff doesn't work, right? I'm sure this is what you're thinking. So this brings us to the second requirement in order to become a more consistent trader. Along with having a trading plan that's based on market behavior, we also need a tool that can filter out, not 100% of the time, but a good portion of the time, the bad trades like we just saw from the good ones. So what is that tool? That tool is the PET-D. You've also heard me speak about this. This is something I was introduced to as well some 4 decades ago on the floor of the Pacific Stock Exchange when I was trading there. And my mentors shared this with me as well. Now at the time, this was a calculation, a formula that we had to calculate every bar, almost on a tick-by-tick basis. It was very cumbersome, so we could only actually do this at the end of the day. But because of the advent of high-speed computers and because we have some great programmers now, Pro Trader Strategy and myself developed it into a color bar algorithm. So all you have to do is see what the PET-D colors the bars to tell you if you're in sync with the short-term trend. For example, let's look at this chart here in Aetna, all right? Obviously, we're in an uptrend. But most likely, you would not have found out you were in an uptrend until right here, right? By the time you had higher highs and higher lows. So you say, okay, we're in an uptrend. Let's say on this pullback, you decide to go long, and you're having a great profit for this one day. And then this happens. Now, if you held on, you probably most likely gave it all back, and it turned into a huge loss, okay? How could the PET-D have helped us? Well, the PET-D is a color bar tool that tells us the short-term trend. And it also can be used in dozens of different other varieties as well. But once you click it on our platform, as you see here on our green strategy tab, PET-D, it automatically changes the colors. So if you have a series of green bars, that's telling you the short-term trend is up. So as you can see here, we knew well in advance that the short-term trend is up, well back here. And we knew well in advance that the short-term trend was going to be lower, well in advance back here. So, as it says, the beauty of the PET-D is that it tells you which direction you should be trading. Now, you see, it doesn't tell you how high or how low. It doesn't tell you when something's going to top out or bottom out. It just tells you on a tick-by-tick basis the short-term direction of the market. But once you know that, you can confirm if your strategy is in sync with that short-term direction. So this is the tool that can help us filter out sometimes those bad trades. So let's put this together. When we put this together, what we call this is the dynamic duo. This is our most consistent package, our most consistent trading package that we have at Specialist Trading and Pro Trader Strategies, because you not only have an extremely consistent strategy, but you have it coupled with an extremely consistent and powerful tool that can filter out some of those bad setups. The Dynamic Duo is our most popular package, and when we put these together, it really accelerates your trading and makes you extremely consistent. Now, let's show you the process of how simple it is to apply this on the PTS Primo Charting Platform, because remember, we designed the platform as a learning tool so that we could take the hard work out of it for you, okay? All right, so let's go back and look at that chart again in VRSM. Someone looking at this, the way they usually trade, would say, once again, Steve, this is resistance right here, okay? I took that $10,000 course. All of the institutions are selling. I cannot be a buyer if I'm going against that big money, okay? Once again, sound familiar, right? This is the way most traders trade, myself included. I'm not trying to be condescending. I did the same thing some 43 years ago. It didn't work for me then, okay? So this is not consistent in any way, betting on the big money to tell you what the market's going to do. What you want to do is apply rule number one, and we make it simple on our platform. The process is the first thing you do, whatever chart, a 5-minute chart, currency pair, commodities, it makes no difference what you're trading. Click on the buy-sell line in the upper green tab here, and you'll automatically see this drop-down menu. The buy-sell line is the 50-period moving average. That's what we call it. We call it buy-sell line because we have 4 different features in which to view it. Let's look at the most simple, which is the 50-period moving average, okay, which we taught you earlier. And you apply that. Now you ask yourself, where is price in relation to that 50-period moving average? Is it below? No, it's above, right? So why in the world would you ever worry about some resistance? Because the market, remember, we're only listening to market behavior, which is the source. The market, the very source of what we're trading, is telling us the overall trend is down. Is up, not down. So why would we want to short? You don't in any way think that the institutions are any better than you. Why would you bet on them? They think the market's going to go lower, going to go down. It's going to go up because the market is telling us it wants to go higher until it changes its mind. Okay, so we're only going to be a buyer. We don't care what the outside noise is telling us. Now, we look for bars that close in the top 25%. Here's one, here's another one, here's one, and here's another one. Now, according to the rules that you learn in the course, we teach you what to look for. This is not a black box. You learn all of the rules on your own. You know what all the requirements are, all of the 4 to 5 different requirements. So, according to the requirements, you think that there's a buy signal, but only one here, right here. So in order to check your work, remember, the platform is an educational tool. We devised a way to check your work. You click on strategy number 4 in our upper green strategy tab. The drop-down menu appears, and click on signal arrows to check your work. And you'll automatically see if you are right, if you're learning. And you're right, because that was a valid signal. Now, that's just half of the dynamic duo. You have a valid, very consistent setup, but now we want to confirm it with the PET-D to increase our odds for consistency. So now we just simply go to the green strategy tab, click on PET-D, and it'll automatically change the colors. And as you can see, the colors turn to green. These down days are now filled in green. These up days are now outlined green. Now remember, you can still have down days in a short-term uptrend. As you can see here, all of these days were down, but we still color them green because the PET-D was saying, hey, I don't care if they're down, the short-term trend is still up. So you have the overall trend in sync with the short-term trend. And on top of that, you have a valid buy signal. Now here's the one thing. In order to have a valid dynamic duo buy signal, it's great that we had all these bars colored green, but we only need the bar above the arrow to be colored green. So for all intents and purposes, all of these bars could be colored red. That would still be okay. But we need this bar to be colored green to be a valid dynamic duo setup. And it is. So let's see what happened. 20 points. Just see how simple it is to become a consistent trader when you listen to only one thing, the market in front of you. There's no reason, if you don't want to, there's no reason to listen to guys on TV to find out what the earnings are. There's no reason to listen to the institutions. There's no reason to look at earnings. It really makes no difference. I stopped listening to all of that 40 years ago, and I'm still here. So if I'm living proof that it really doesn't matter, then don't you think you can make your trading as simple as this? Let's look at that other example now in PINS. Someone looking at this would say, well, Steve, there's just not enough information. We're just in a range here. I'm not going to trade something like this. It's the market. If you're asking me what the market's telling me, it's telling me that it's going sideways and it doesn't know what it wants to do. So I'm not going to trade a market that has no idea. Well, let's ask the buy-sell line. Click on the buy-sell line, and it's telling us, once we apply the 50-period moving average, that the overall trend is down. And actually, the market's telling us that it wants to go lower. Until it goes and closes 3 to 5 bars above the 50 period, it's telling us, even though I'm going sideways, I want to go lower. So we're not going to argue with that. We're going to look for sell setups. We're going to look for bars that close on the bottom 25%, and then that meet the remaining 3 rules of strategy 4. Well, we see this bar here. This looks like a good candidate. So we study our work. We've studied the course rules, and now in order to check, we click on strategy 4, click on the signal arrows, and guess what? We're right. We are correct. You see, what the platform is trying to do is trying to give you a way to check your work so that ultimately you no longer have to rely on these signal arrows. I stopped looking at these arrows decades ago. I know when I just look at a chart if there's a strategy 4 or a buy or sell signal right in front of me, and I want to get you to that same point as well. But while you're learning, we've supplied you with educational arrows to check your work. All right, so you have the first part of the dynamic duo telling you there's a valid sell signal. Now we want to add the pet D. We click that tab and it changes the colors. Now it's great that all these colors are red, but all we need is for the bar below the arrow to be colored red, which it is. So that's a valid dynamic duo sell signal. We take it, and look what happens. The market falls 10 points, and all these valid sell signals are generated along the way. Now, let's look at that last setup we had that had all the losses, right? We had 2 valid sell signals here, but once we apply the pet D to confirm, look what happened. Both of these sell signals, both of the bars were colored green. Remember, in order to have a valid dynamic duo sell setup, you need a red bar. So, this is telling us we should not take the trade. Therefore, we would not have lost any money. Now, as the trade continued, we had 2 buy setups here. In order for these to be valid dynamic duo buy signals, we need to have these bars colored green by the pet D. What color are they? They're both colored red. You see how the pet D, how sensitive it is? It started coloring both these red well before. So, are you going to take these setups according to the dynamic duo method? Absolutely not. So once again, you would not have taken these either and missed that big drop. You see how sensitive the pet D is and how it can really filter out some of these losing trades? And as it says here, some of the best trades are the ones you never take. So let's look at some more dynamic duo examples just to give you a great idea as to how these work in the last month or so, okay? These are very recent setups. Here's an example in APA. We're above the 50. We close in the top 25%. It's a valid dynamic duo buy setup, and the stock goes up 8 points coming into the first week in January, just last week. Okay? There's no reason to know why it, someone could say, well, did you know why it gapped up? No, we never really looked. I'm sure there was some fundamental news which caused it to gap up like that, but I mean, who cares? I mean, as long as it's going in our direction, I really don't care what the reason is. That's like walking down the street and you're getting covered in rain. You don't have an umbrella and it's pouring. Do you really care at that moment why it's raining? No, you just want to react. You just want to be, taking cover. It's the same thing with trading. If you have a winning trade, you really don't care why. If you have a nice profit, that's good enough, right? Here's a sell signal in Twitter. This was actually coming into November of this past year, okay? It's a sell signal colored red. Remember, the bars before it are green. A few of them are colored green. We don't care. As long as the signal bar, the setup bar below the arrow is red, that's all we need to know. And Twitter, 2 days, gap down 10 points. Once again, obviously some news came out. Someone could say, well, how did you know that? We didn't know. The market was telling us it wanted to go lower. On the overall trend, it was below the 50. And on the short term, with the strategy 4 rules, along with the pet D. How about INCY? Okay, we're above the 50. We close in the top 25%. It's a valid buy signal, colored green by the pet D. It immediately goes up 10 points coming into December. Nice trade, right? Now, as the trade starts to falter, the bars turn red and we get two buy signals here, just like before. Well, we're not going to take them because they're both either filled red or outlined red. That's enough for us. Remember, we need them to be filled green like this or outlined green like this. But it's filled red or outlined red, so we don't take them. And guess what? We saved ourselves a nice drop here in January. How about DLTR? Well, here is an advanced setup, all right? This is for more advanced traders because the majority of the bars were originally above the 50, and we only had one closed. And we usually ask our students while they're beginning to look for 3 to 5 closes below the 50-period moving average. Now, if you're more advanced and if you feel you don't need to wait, that's fine. So you could have taken this valid dynamic duo setup and had a nice trade here, but then it went down for 3 days and then kind of went sideways, but then another sell signal was generated. This was well below the 50, a number of days, and all the bars were red. So, as you can see, 23 points later on coming into December. Tesla. Now, we all know that Tesla has been going straight up. All right, everyone, it's been in the news, the earnings or the company's worth. Okay, that's all well and good. But how did we know just a couple of weeks ago to buy this stock before it went up another 100 points? Why? Because it was above the 50 market behavior, and they closed in the top 25%, and the remaining of the market behavior rules were met, and the PET confirmed it. So in the first week of January, I should say the last day of December, the first day of January, you could have gone long and potentially captured 95 points coming into this week. Here's an example in letter W. Now, it looks more advanced, but actually you had a number of bars below. They're all green, but they're below the 50. So we're out of sync here. The short term is out of sync with the overall trend. You had one close above and then right back down below. Okay, so not enough 1 to 3 or 3 to 5 bars above. And on top of this is a strategy number 4 sell signal, and it's colored red. So this is a valid dynamic duo sell signal that could have potentially captured 32 points in just about a week. All right, here we have an example in SHOP. This was in December of last year, just about a month ago. 2 buy signals, they're above the 50. This one closed down on the day. And someone could say, well, Steve, it's a down day, so should that be colored red? No, the PET D says that this bar closed down and the bar before it closed down, but they're still in a short-term uptrend. So it's going to color them green. Now this bar closed higher in the top 25%, so it's outlined green. They're both valid buy signals. The stock went up 110 points coming into this week in January, okay? And if you missed those setups, there was another one here at the end of December, just a couple of weeks ago. Lastly, we have 3 sell signals, dynamic duo in PSA. They're all valid, 40 points coming into the end of November, beginning of December. Now, I know we've just focused on daily bars of stocks. Let's look at some other markets and some other time frames. These are all dynamic duo signals. Let's look at a weekly chart of Apple. We all know that Apple's been going up. But if you go back on a weekly chart, going back to last year, last July and August, about 6 months ago, you would have said, well, we've been going up, but look at this may be a reversal. Okay, we have a higher high, but then look at we closed on or near the low. So this, to me, according to that technical analysis course I took and all the books I've been reading, says that this is a really strong trend that we're going lower. So this means, and we went lower the next day, this means that I should probably sell Apple. If I'm long, or if I was thinking about getting long, I should stay out of this, right? Well, you see how all the justification I'm using is all based on this old, tired, worn out, conventional wisdom that shows no levels of consistency. Why? Because it's not really based on market behavior. What is the market telling us? Well, just because we're looking at a weekly chart does not mean we've changed anything. We still follow the same process on our PTS Primo Charting Platform. The first thing we do is click on the buy-sell line. In the drop-down menu, we click on 50-period moving average. That will tell us what the overall trend is, regardless if we think this is a reversal or not. And the overall trend is still up. The last month or two has still been above the 50, so we're not going to short anything, all right? Now we look for bars that close in the top 50% of their, I should say top 25% of their range, and we have a number, but only one meets all the qualifications, and that is this one. So to check our work, we do the same process, click on Strategy 4, click on Signal Arrow, and we check our work, and we're right. This is a valid buy signal. This was in August of last year, 6 months ago, you would have had a very highly consistent setup to go long. But how can we add our odds even better in our favor? By adding the pet D. Let's make this a dynamic duo setup. Click on the pet D and it automatically changes the colors, either green or red. Now what color is the signal bar? That's the bar above the arrow. It's green. So that is giving us a highly consistent, a highly probable setup. Either you could buy the calls, you could buy some type of option strategy with a bias to the upside, or maybe buy the stock. Maybe you're already long Apple. Maybe this was a way to buy more shares. You wanted to get back in. That would have been a great setup because the stock has gone up over 100 points, close to 120 points now in the last 6 months, okay? Now, that's a weekly chart. Let's look at a 4-hour chart of the Swiss franc, all right? This was December 26th, just a couple of weeks ago. Price is below the 50. We have a bar that closes in the bottom 25%. It's a valid strategy for sell signal. In order to add consistency, we apply the pet D, and yes, it is colored red. Now, it's nice that all these are colored red as well, but that's okay. All we need is for the bar below the arrow to be colored red. And we see that the Swiss franc in the next week or 4 days went down 150 pips. That's roughly about $1,500 per unit. And here is a 30-minute chart of the E-mini futures. This was January 7th and January 8th, just this past week or so, okay? Now, originally the market went straight down and then we shot up this past week. So how could this have helped us? We see that the pet D is already here. Well, we have a strategy for a sell signal right here. This is on January 7th, which potentially could have captured us upwards of 55 points. That's how much room we had to work with. Then the market started to shift. It started to change its mind. You see how the short-term trend identifier, the pet D, already here has a number of bars colored green. This is telling us that well before we've crossed above the 50, it's already that sensitive, saying that most likely we're going into an uptrend. Once you cross above, you have green bars above the 50, and where price is above the 50. That is the overall trend and the short-term trend in sync. Now it's just as simple as applying strategy 4 rules. And you can see a buy signal was generated right here, closing at the top 25%, which could have potentially given you another 25 points. So if you had taken these two setups here, potentially you could have captured upwards of 80 points in 2 days. That's $4,000 just trading one contract, okay? We're not saying you would have, but potentially you could have captured that. And if you missed any one of those, well, guess what? There were more signals being generated along the way. So let's recap before we go into question and answers. Remember, the first thing we want to do with any strategy, with any method, in order to increase your odds for consistency, to make you a more consistent trader, is to add the buy-sell line, that's the 50-period moving average, and the top-bottom 25% edge. That's whenever you get a signal, it must close in the top portion of its range if it's a buy signal, or the bottom portion if it's a sell signal. If you apply these two rules, you will automatically increase your odds for consistency tremendously. You can start doing that today. In fact, go back and add these two simple edges to your current strategy and go back and look at your last 10, 20 trades, see how they could have helped you, how they could have increased your odds for consistency. I can almost guarantee you they would have. Now, these two simple but powerful rules make up one of our most powerful and consistent strategies. It's strategy number 4. It's the very first strategy my mentors taught me some 4 decades ago, and I continue to use it on a daily basis in some capacity, okay? Now, it is a very consistent method, but as you've seen, as I showed you, it will still have some losses from time to time. So how can we filter out those losses? By applying the pet D. The pet D is the most powerful trend identifier we have at Specialist Trading and Pro Trader Strategies. It's another tool that I took from the floor for my trading on the floor of the Pacific Stock Exchange, and then we made simple for you. We turned it into a proprietary algorithm so that all you have to do is click on it on our platform, and it automatically changes into a color bar algorithm. Now, when you combine these two things together, you get what we call our dynamic duo of success. This is adding strategy 4 and the pet D. You can't find this anywhere else other than on the PTS Primo Charting Platform. This is how we make it simple. By applying that learning and trading process on our platform, you'll be up and running and make 2020 hopefully your best year ever. So ask yourself, do you think these edges can make your trading consistent in 2020? I just showed you how you can do it. So we have a great attendee discount for all of you today. we're going to offer you our dynamic duo course. This is strategy number 4 along with the PET-D tool. This is what we call our dynamic duo special. You get all these different categories, the entries, exits, and stops, all of these included, but we're not going to stop there. Included with this great offer we have for you today, we're going to throw in 12 months of our platform, the PTS Primo Charting Platform, because we want to make it simple for you. It wouldn't be as easy by simply learning the online courses and having the tools and trying to figure out how to do it. It's so much simpler when you apply it on our platform. Now, 12 months of our platform will normally cost you close to $1,800, but we're going to discount that greatly today. In fact, the discount is so great, it's free. We're going to throw in a full year free of the PTS Primo Charting Platform with our dynamic duo special. Now, with the platform, you're going to get tons of more features as well. It's just not strategy 4 and the PET-D. Obviously, you're getting those, but you're also getting our proprietary exit level feature. Now, in our course, we give you upwards of 6 or 7 different ways to exit. Here is one of them, what we automated. It's our range extension. And this is a great way to exit and to decide if you want to use this to exit on dynamic duo setups. For example, here was a valid dynamic duo signal in BBBY. This was coming into December, and this was a very nice trade. Now, a lot of students say, well, Steve, this is great. I just don't know where and how to exit. Well, one of the 7 different ways in which we tell you how to exit is with range extensions. I'm not going to go into explaining the inner workings of it. We explained it in the course, but we've automated. So once again, all you have to do is click on Strategy 4. In the drop-down menu, click on Range Extensions, and you'll automatically see auto-generated 1 to 4 different places to exit. All right. If you exit at this first level, you'll usually get a little more than a 1. It's about a 1.5 to 1 risk-reward ratio, 2 to 1, 3 to 1, and the best ratio here, 4 to 1. So you're basically making 4 times what you're risking. Now, we always tell our students that you should exit your entire position at the 4th level if you're planning on holding it that long, because usually at this point, this is where the trend changes. And look at how that each one and every one of these exit levels would have produced a profit because a month later the stock was lower. How about this sell signal in letter J? Okay, this is a valid strategy number 4, dynamic duo sell signal. Let's say you had taken it, but you're not sure where to get out. Well, once again, all you have to do is click on strategy 4 on our platform, click on range extensions, and if you had taken the very first exit, this would have been a wise choice to get out. A lot of our students like to at least take off at each level, take off a little bit, and then maybe move their stop to unchanged, because look what happened after that. Okay? This is all automatically done for you on our platform. Included with that, you get 90 of the most prominent technical indicators. You get access to Bloomberg TV, but one of the best things available on the platform is our signal scanner, because you can scan nightly for dynamic duo setups. For example, on the Strategy 4 drop-down menu, instead of clicking signal arrows or range extensions, this time you click on Scanner, and you'll see this page appear, our Strategy Scanner page. Click on Load Symbols, and any symbol you can think of, currency pairs, futures, different exchanges in Europe, in the Asian markets. You can also click on commodities and stocks. Well, it'll automatically appear in a spreadsheet form. Then you just click on Scan, and in about a minute or less than a minute, you'll see a series of green and red horizontal bars. The green bars mean there's a buy signal in that corresponding stock. The red bars mean there's a sell signal. Now, let's say you had this platform 2 weeks ago. Let's say I gave this presentation 2 weeks ago, and you're scanning on the last day of the year, 12/31, all right? You would have scanned and seen that there was a buy signal, strategy 4 buy signal in LW, okay? You check your work and you go, well, yeah, it's above the 50. Close in the top 25%. It meets all the requirements. I can see right here it's a valid strategy 4 setup. But you know what? I want to make sure that it's a dynamic duo setup, because even though it appears to be a valid setup and there's a high level of consistency, I want to make sure I have that added level of consistency. So how do we do that? Well, we turn it into a dynamic duo trade setup, and we simply click on the PET-D. Okay, click on PET-D, and what color is the setup bar? It's green, right? So that's a valid setup to go long LW. Now, you could have purchased options, you could have purchased the stock, but look what happened to the stock. It went up 9 points in the next 2 days. Remember, it doesn't matter what the bar's colors are after. All we care about is the color of the bar above the arrow. And this just happened last week, okay? So this is a valid setup and something you could have scanned for on our platform. Along with this, You get great personalized tech support. So let's break this down, okay? You're going to get strategy number 4. You're going to get the Pet D, all right? You're also going to get a full year of the PTS Primo Charting Platform. All the things you need to make you a more consistent trader in 2020. Now, if you normally purchase these separately, strategy 4 would cost you close to $700. The Pet D would cost you close to $3,000. And as we said earlier, the PTS Primo charts for a year would cost you close to $1,800. So totally, altogether, we added it up, it would be close to $5,500, okay? We're not going to charge you anywhere near that. In fact, we're going to discount it tremendously. We're only going to charge you $29.95, which includes the 12 months of the PTS Primo Charting Platform. Here's the best news about that. We realize that still some of you may not be able to come up with $29.95. Well, guess what? We're going to still offer you payment plans. So for a small deposit, you don't have to come up with $29.95. You can just put down a small deposit with Pro Trader Strategies, and you can still be up and running and a student of mine in the Dynamic Duo course, along with 1 full year of the PTS Primo Charting Platform included. Remember, as the title stated this before we began today, you deserve to become a more consistent trader. I just showed you how, by becoming a student of mine in the Dynamic Duo course. Here's how to take advantage of this great offer. Contact Pro Trader Strategies. They're my sister site. They're in charge of all the discounts and all the course tech support. I would suggest, if you want to put together a payment plan, to call them directly at area code 310-598-6677, because they can structure that for you and they will be able to do that right away, and you won't have to worry about anything. All you'll have to do is simply put down a small predefined deposit, and you'll be up and running as early as today. That's how simple this process is. So I would suggest that the link you see at the very bottom is now in the chat box, because that link is not a live link. But if you go to the chat box, you can simply click that link on underneath the chat heading, and it will take you to the sign up page as well as the information page. We have a few minutes left for any questions, so please remember, if you do have any questions, just go to your question and answer box, and I will answer them to the best of my ability. Okay, I see a first question here is, Steve, does this work on futures? Yes, it does. You probably asked that prior to. I showed that future example in the 30-minute chart of the E-mini. Now, to tell you how well it works with futures, I use it on a daily basis on roughly tick charts and 5-minute charts of the futures. So that's how well this works, okay? I was using it this morning. It's a great way to trade intraday. You can also use it on tick charts or intraday charts of your trading currency pairs or stocks. Makes no difference, okay? So yes, it does. Another question, what if I want to use my own platform? Well, you can do that. We will supply you. You'd have to put this together with Pro Trader Strategies, because once again, they're in charge of all the tech support, but they will give you the add-ons. Those are the add-ons that you have to put onto your platform, and that will automatically color the bars green for the Pet D or red for the Pet D, or it will automatically set up those arrows for you to learn from. But remember, the process of learning is not as simple. You will have to, go into your indicator box, search for Pet D or search for Strategy 4. It's a lot simpler. We made it so simple on our platform because everything is one click away. The entire process. Along with that, you won't get that, the benefit of those automated exit levels. You won't get the benefit of the scanner. So it's so much easier by using this on our platform. I think that's the best way to go. What are the major platforms we can use this with? Well, you can use this with, let's see, with TradeStation, Metastock, Sierra Charts. You can use it with Thinkorswim, but with the addition of a Ninja Trader platform. Pro Trader Strategies can explain that a little better, but you can use it with those platforms. Did I say Metastock, MT4? Yes, MT4. Most of the major platforms you can apply it to. So there's no worry about that. We have the add-ons for that. But once again, as I stated, you saw the process with the platform, how simple it is. It makes it a lot easier there. Question, what is the difference between strategy 4 and 5? Well, strategy 4 is a pattern recognition strategy based off of a specific pattern that we teach you in the course. I can't go into it right now. Strategy number 5 is a candlestick pattern, but it's a non-traditional way of viewing candlesticks. It's a different way to view the candlesticks, and it's entirely a different way than strategy 4. The only thing I can relate is that they both use the 50-period moving average to tell you whether to buy or to sell, but they use entirely different means, okay? Strategy 4, in terms of their, I guess their energy or their personality, strategy 4 generates a lot more signals, but strategy 5 is a great strategy. Many times you'll see a trend just take off, and whereas strategy 4 may have already generated a signal, maybe you missed it, strategy 5 will continue to generate signals many times, not guaranteed, but many times, along within the trend. So that's a good, it's a good alternate strategy to have to trade while a strong trend is underway, okay? We've given classes on strategy 5 before, and we'll probably be giving one of those in the near future as well, okay? Okay, good questions. I see we're out about time, and I think those are all the questions we had. Remember, there is absolutely no obligation. If you have more questions concerning discounts and pricing and tech support, contact Pro Trader Strategies at 310-598-6677. As I stated, there's absolutely no obligation. They have manned trading consultants manning the phones right now. They'll be happy to answer anything without, any pressure. You don't have to purchase anything. And they could be able to set up a payment plan for you right now as well, okay? So call them if you have any questions, or I would suggest calling them if you're interested in a payment plan. You can be up and running as early as today, okay? As we close here, I just want to say thank you so much for attending today and taking time out of your Wednesday. As you look and have one more view of our disclaimer, I really want to thank you, and I really hope that you learned something. Remember, experiment and research with these two edges I shared with you, the 50-period moving average as well as the top and bottom 25% features. And I can really almost guarantee that you see how much they can increase your odds for consistency. And if you really want to increase them even more, become a student of mine in the Strategy Number 4 course and the Pet D course as well, the dynamic duo of consistency. Thank you so much for attending. Hope to see you in class, and I'll talk to you soon. Bye-bye.